I am pretty certain that we're going to see some serious inflation in 2012. I know a lot of people right now are thinking, because they see right at the moment, maybe some deflation. And I know maybe it's not a sure bet that Bernanke is going to do more quantitative easing. I think it's a pretty good bet that he is. But let's not blame him per se. Let's just say it's the same game that's been going on forever. There's always, say he's trying to calculate everything accurate as possible, not to cause inflation, and do the mandate of the Federal Reserve, as much employment as possible with price controls within reason, where inflation is not taking hold in the economy. So he's let's say he's actually very honestly trying to keep a very good balancing act, and he's very good at it. I think the thing that's going to happen with him is the same mistake that happened to everybody who tries to run a central bank. And it kind of reveals itself in this one statement here: root causes of hyperinflation. By definition, hyperinflation is a rapid increase in the price index, the money supply, multiplied by the velocity of money, without a corresponding increase in real output. The real key to this is the velocity of money. There is no velocity of money. Well, I mean, the velocity of money is low. I'm being a little facetious. There is no velocity of money. But what I'm saying is people are holding money. That's an obvious fact. People are afraid to make big purchases, and they're afraid to just spend money frivolously, which I'm always like that anyway because I like to invest money. But more the average people are trying to hold back on spending money on unnecessary items. So, but we do know that the money supply is going up. Now this chart goes back to 2007. The grayed out area represents periods of U.S. recession. So this is still in a recessionary time. And this is per the Ludwig von Mises Institute, highly respected, that Mark Faber supports, I'd imagine. But you look in 2011, the money supply is still going up, and this is considered a true money supply. I don't know how this is measured, but I trust what somebody from this Ludwig von Mises Institute would put out for numbers. I would trust the information. But we're seeing deflation. We looked at the numbers for October. There was actually a consumer price decrease. The consumer price inflation rate was 0 in November. And you're seeing some of the metals like gold and silver going down, but not oil. Anyway, but I think that's because people are just holding back, because hyperinflation is actually due to two things: the supply of money and the velocity of money. It has to be exchanging in the hands of people. It has to be exchanged for goods. So what's going to happen is Bernanke is going to, honestly, let's just say he's being honest, he's going to try to stimulate the economy a little bit more. And this is what's always happened. And people are going to maybe hold back on spending. And all of a sudden the dam's going to break and the floodgate's going to open. Because once that starts to open up, the prices will increase because of the velocity of money. And once they start increasing, it could start taking a snowball effect. And that's where you're going to see your gold and silver prices and a lot of other assets that are hard assets go up in value greatly. So I think anybody who is holding silver is definitely not doing the wrong thing. They're doing the right thing. And we need to look at something else about in Germany. Now this, I know maybe we're not going to get into hyperinflation like this, but who knows? I mean, the debt is pretty high. It's not, I don't think they'd have to inflate it this high, but we can go, I think we're going to go into very strong inflation because of the debt situation. But look what happened in Germany. There was a large rise in gold from January 1918 to January 1920 to March 1920. Then all of a sudden, the gold price started to decrease slightly for like a little over a year. Pretty much stayed flat and started lowering. Then it started taking off, and these are multiples of 10. So I mean, this chart would be like 8 feet tall if it was really on paper in a linear chart. This is an exponential chart. These are multiples of 10. So the prices of gold actually just went astronomical in that period of time after that. But this is always what happens, pretty much. I think it happens in every single case. Before there's a hard inflationary period, they have a deflationary period. And I think that's what's going on today. Because looking at the facts, this isn't some hearsay. We have money supply, it's going up, a true money supply. And I trust these numbers by this Ludwig von Mises Institute. It's just that the velocity of money is going down because people are holding and hoarding on to cash. So you got to remember the psychology is the exact opposite of what's going to happen in the future. It's almost like when people are overconfident in stock markets or real estate markets and they're thinking they're on top of the world. Well, they were not on top of the world. They were totally wrong. And what we're seeing right now is an opposite effect where it almost seems as if the fiat currency is the place to be. It's not. It is definitely not. And I'm 100% sure of that because of some of these obvious glaring facts. As far as fiat currency, toilet paper money, as some detractors call it, and I will call it that too, the history of fiat money has been one of total failure. In fact, every fiat currency since the Romans first began the practice in the first century has ended up in devaluation and collapse, not only of the currency, but of the entire economy that housed the fiat currency as well. This happened every single time. Now, just going back, are we doing this? Yes, we are, because we look at our debt situation in the United States. This is the debt clock, $15 trillion. There's a 112 million taxpayers. So, that's, you're looking at those numbers. We have $134,000 per taxpayer, and it's going up. It can't be paid back, and they're going to default on the debt. So if they default on the debt, what happens to the dollar? It collapses overnight. So people who are holding gold and silver are definitely not doing the wrong thing. Definitely not. It's not even a guess. It's not a guess in any respect. And that's why I have to stick with hard facts. And I know the market sentiment right now is almost like the opposite. But that's not the reality behind it. Yeah, of course the reality is today, if you're going to go trade in your gold or silver, you're in this period right here, the deflationary stage. Don't do it. Wait. And that's what I'm going to do. Now, as far as, again, with the fiat currencies, every single fiat currency always failed. It's an absolute fact. It's a postulate. It's not an opinion. It's exactly how it is. Fiat money in Rome started, I guess, with Nero and devalued the denarius, where it was down to 43% silver, and then in 244 AD, Emperor Philip had dropped it to 5/100ths of a percent or 1/20th of a percent of silver content, and it went down to 1/50th of a percent of silver content at the time of the Roman collapse. It was basically nothing. It was basically worth nothing. Even though it was a metal, there was hardly any silver in it at all. Now, the Chinese, they're the ones that actually developed the paper money. They're the first ones to use it. And it was Genghis Khan's grandson, Kublai Khan, who united China and assumed the emperorship. And he's the one who really pushed the paper currency. But it was all by force. And but what happened eventually, I know like Marco Polo visited China at the time. He says they had a perfect racket going with the secret of alchemy and perfection by using paper money. And he brought this word back to Europe, and then it kind of spread from there. But it was actually implemented by force. But what it still resulted in China, at what happened later on, was a lot of the most wealthy lost their money, and there was a hell of a lot of infighting between the wealthy. So I think that's going to be the same type of situation that's going to happen in the United States. And you probably haven't heard the end of the MF Global debacle, because I'm sure there's some seriously pissed off people, and you don't know what's going on. I mean, they could be, maybe they're not doing something like illegal, but they could be setting people up in other ways and getting together to make an end run attack at somebody who screwed them over. There's so many different ways they can get back at people. It's beyond belief. So there is going to be a lot of serious infighting going on. And that spells bad news for the so-called elite, which I can care less about. But I do think that it's a 100% sure bet, because the U.S. has a debt similar to that of Weimar Germany. Maybe not quite as high as that, but it's getting up there. Although the reasons for the debt are completely different, it appears that for the moment the Mount Everest of IOUs is going to be impossible to pay back. And the elite notice they're going to default on a debt. And you know what's going to happen overnight to the currency then? It's going to be worthless practically once they default on a debt. I guess the U.S. could just print $10 trillion bills and hand them out. They're not going to do that. They're going to default. But the implication of such actions are obvious. So what they're going to do, but I don't think they're going to default this year. This stuff is going to take a little longer, but I think the inflation's going to start kicking in this year. That's why hold on to the gold and silver. And I think I'm not sure how much more I want to put into this stuff, but I know I'm going to be buying some here and there, no matter what, because it's too good of a deal right now. And do remember what happened with Germany. I mean, from this period to this period, gold was going down. Gold, not silver. So silver, I don't know what silver was doing during this time. It was probably bouncing up and down like this, driving people crazy. But gold being a lot more steady, it was sinking. And actually, if we're looking in 2011, gold is actually still up. But it was actually sinking here. But then what happened? These are multiples of 10. Inside of a few years, it went all the way right to the roof. And that's because the currency went down to nothing. But that's, if I got to figure that they will default on a debt at one point in time, it might be 2013. I don't like predicting so far off, but I don't think they're going to default in 2012. I can't see it. But I think that's the game they're going to play. They're going to default on a debt, and they're going to screw China out of whatever money they're supposed to have. And that'll piss them off big time. But, if you're holding gold and you're holding silver and they default on a debt, so what? It ain't going to bother you at all. So it is the right place to be, and it's a no-brainer. It's not a guess. It's just how it is.